Hello everyone, hope you guys are doing great today. So in my today's video, I will talk to you about a company called Nureca Limited. And the reason I'm making a video on this is because I personally feel that this company is a potential candidate for a turnaround story. And I hope by the end of this video, you will understand. So if you look at the business model of this company, so they are in the business of home healthcare and wellness products. So and they sell most of their products generally online. If we even if you look at their recent numbers, almost 90% of their sales comes through online only. So they call this, as I said, they call themselves a consumer healthcare company, and they have products under various categories. Like home diagnostic wellness device and personal fitness. How to say personal fitness equipment under brands like Doctor Trust and Doctor Physio. Currently, they have around 227 plus active SKUs, and they launch almost seven new products in the Q1 of FY26. So, and if we dive down a little bit more detail into their product categories, so the first is under the chronic diseases, where they sell products for like BP monitors, finger pulse oximeters, glucose meters, and thermometers. And then in lifestyles, they sell products like personal scales, massagers, fitness trackers, dental and personal care. Then they have their products under orthopedic categories also, where they sell memory foam pillows, massages, pain management, and all those things. And they are also into have products under category of mother and baby. So let's understand what happened to this company earlier and what went wrong with it and why they are a potential turnaround business. So if you go back almost 5 years back, the company came with the IPO in 20, Feb of 2021, and there is around 100 crore as the money. So if you look at it, the company said that they're raising this money primary for working capital, and at that time this positioned themselves that they'll be a digital first home healthcare company, and they will only sell their products through digital. They will not manufacture anything. They will import their products and sell, and their focus was mainly on chronic disease monitoring devices. And they said they will expand only through their e-commerce platform, and that's what they had promised. And then obviously, what happened? The COVID boom period happened. Because of the pandemic, the demand increased drastically for home health devices, especially for oximeters, thermometers, and monitoring devices. It's like it was there in everyone houses. If you were, I mean, I personally believe that I had ordered, you guys also would have ordered the same thing. And what happened? The revenue, right? The revenue of the company, which was only around 20 crores in FY20, surged by almost 9 to 10 times to almost 200 crores by the end of FY21. And obviously, at the back of it, the demand increased, the margins were there, and the profitability also increased. And this was a good sign. But at the same time, people forgot, or how to say, people misunderstood this demand, thinking that this demand will last forever. But actually, this demand was only at the back of the pandemic. So what happened when the things started becoming normal after 2022? So demand for oximeters and pandemic related devices dropped sharply, and because of which the company had oversupply. And obviously, at the same time, when the competitors realized that there is so much demand and we can sell this product, there were a lot of competition for them also. And you won't believe me, the revenue fell from 255 crores in FY 2022 to almost more than half to 111 crores in FY23. And the company reported a loss of almost 60 crores in that year. So if you so they personally, how I see it, they came with the IPO at the right time because they knew the demand was increasing and they needed money. They raised the money, they took care of the demand. But one mistake that happened, I from the investor as well as from the company perspective, is both of them thought that this demand is going to last forever. And obviously, when the demand fell down, it had impact on the overall business because the top line as well as the bottom line reduced drastically. At the same time, the investors who thought that this demand is going to last forever and bought the stock at the peak had a very bad experience, because the stock fell all the way high of 2000 rupees to almost right now it's at a level of around 248 rupees. So once these things happen, the company also realized, okay, that this demand was one off, and now we need to change the way that we are doing the things, and we need to cater to the demands for the future so that the business can grow. So what did they do, right? Earlier, as I said, they had promised that they will sell their products only through online channels and they will not manufacture anything in India. Now, what they have done, they've started their own manufacturing plants in a plant in India where they manufacture around 8 lakhs units per year. And other thing that they're doing is, right, they are aggressively expanding into offline retail like distributors and pharmacies, and they are getting into partnership with quick commerce like Zepto, Blinkit, Instamart, so that they can cater to people who want this product at a tip of a fingertip. And other thing that they're doing is that they're expanding their product, because if you go and look back at their PPT back in 2021 and 2022, the product category was not that big, but now they're like completely expanding into wellness and fitness categories. And the other thing, if you see what is happening over here, is like in the December of 2025, the promoters bought back the shares at a significant premium. Even though the shares were trading at around 200 level, the how to say, the promoters bought the shares at a quite a high premium. And that's why I personally believe that this is a potential turnaround. Because if you look at their revenue for Q3 FY26, the revenue increased by almost 49% to 39 crores, and PAT was up by almost 233% to 3.73 crores. So this clearly shows that the management has learned from their old mistakes, and they're taking the right decisions to grow. And that, and it's not about what they are saying, it's about what they have done at this point of time. From where the revenue fell down to losses and margins completely going away, sales are increasing, margins are slightly improving, and the profit is also coming back. So, and what they are saying is like that the opportunity that they have is like they are believing that more and more people in India will be aware to take care of their health, and they want such products. So they believe when this happens, the demand for their product, and especially the brand which is Dr. Trust, will definitely help them to grow further. And that's why I personally believe that it is a potential turnaround story. See, here I'm using the word potential. I'm not saying confirmed turnaround story, because you don't know what will happen in the future. That the steps that they are taking are currently giving, the right results. But if anything else changes in the future, it could be a bad thing. So if anybody is looking into invest in this company, please be careful. Uh, go into details further, and even if you want to invest, start with a small amount to see how and things where it goes, and grow with the business, and that is the most important things. So let's see in the coming years whether this business is going to completely turn around or it's going to be a failure. If you like this video, please do subscribe to my channel. Thank you and God bless you.